In the last week alone, I'm down over $4,000 in my long term dividend portfolio. And some people that look at this might just panic, right? And go, you're down 2.3%, 2.4% if you invested during this time or started your investing journey during this time. You're looking at it and you're going, why? Why am I investing this money? I'm just losing money. It's gambling, right? I need to get out of this position or get out of these plays or get out of this account and no longer invest. And I see this unfortunately a lot throughout my years, right, of investing into cryptocurrency, stocks, homes, whatever, right? I see it a lot. People can't deal with the fluctuation, especially when it comes to the long term positions for some reason. Something that's supposed to be a long term appreciating asset, they look at and go, you know what, I can't handle what's happening in the short term. It's like anything could happen today and tomorrow, but ultimately, historically, the returns have been likely, right? You've seen those returns consistently. So you question it and what it's doing in the short term rather than seeing it through for the long term. And I think this is a struggle that a ton of people have. Just seeing the numbers, seeing the percentages, and then giving up on what they have there. So I want to talk about this and hopefully I can clear your mind a little bit and give you that second opinion that you need when it comes to investing for your future, investing for your retirement, and maybe even investing for the next couple of years, right? So if you could hit the like button, hit the subscribe button. If you guys want to get your investing journey started, feel free to check out my link for Robinhood or Webull down there. And also, even crypto.com is offering stocks. I just always think it's a great place to have a platform that offers you the ability to get a Roth IRA or traditional IRA. And Robinhood or Webull would be one of those. So feel free to check out those links in the description. But like I said, I am down $4,500 in the last week alone, 2.42%. And what's crazy is the reason why I'm thinking about this is because anytime that I recommend, starting your investing journey to anybody, they always seem to invest and then you have an immediate downturn of the market. And this right away tests your strength. And for maybe the six or seven people that I have talked to about long term investing, all right, long term investments, um, maybe I don't know, four of them have decided to go a different route because of what has happened. Now, one of those is uncertain because I just talked to a childhood friend as well as sports friend, and basically family. Last week about investing into the stock market, investing into the S&P 500, investing into growth ETFs, and investing consistently for your retirement, right? Setting up a traditional IRA. If you're gaining 12, 20, or whatever percentage for the last 10 years and the next 20 years and the next 30 years, you can gain so much in the end, right? So setting up that, you start to see that immediate downturn and the market doesn't really look great. This tests you so much because your mindset is not set up the same way my mind is, where I've invested for such a long time and I understand that the market will recover. I understand that history does dictate what the future will bring. And when we have historic, returns in an ETF, in an index fund or something like that, right? You're going to see that statistically, you're going to see that work out in the end, right? If it's an average of 10%, you most likely will see that average of 10%. Doesn't mean that this year is going to be 10%. No, but next year could be 20%, right? Or if this is down 5%, next year could be, 25%, right? The point is that over time, you will have that average of about 10, 12, and whatever position you're looking at, you'll see that average over time. But that's just the thing. Those are the key words, over time. Not necessarily tomorrow or next week or this year. It could be 2, it could be 3, it could be 5 or 10 years. But you will see that consistency to where the average will work out and it will be, let's say it's 5%, 5 to 10%, or 10 to 15%, or 15 to 20%, whatever that average actually is. So I'm not sweating it. Even though I lost $4,700 at the time of recording this video, down 2.5. Sorry, I was going to say I tend to see things differently. Dyslexia. 2.5% down, $4,715 or so, continues to change. It's not something that worries me ever. Right? It's not something that worries me at all, because I understand the long-term mindset. And I think you have to also see that. Don't just react to what's happening today, or what's happening this week, or what's happening this month. Continue to invest. As you see it lower, you have a better opportunity to buy more. So if you are consistently buying every single day, today you will buy more than what you bought tomorrow. Still the same dollar worth, but you'll get different shares, a decent amount more shares. Let's say something's worth $1 the day that you buy it, and you buy 100 of them, and you're buying $100 a day if you can afford that. Let's make it easier. Let's say $10 a day. You're getting 10 of those shares, but then it decides to drop down and decrease by 50%. Right? I don't think an ETF is ever doing that, but I don't think the broader market is ever doing it. But let's say it does, and it drops down to 50 cents. Now, if you still buy that $10, you're now getting 20 shares. So when it gets back up to that dollar, you are able to break even a lot quicker. It doesn't need to get to $1 in order for you to break even. It gets to 75 cents and you're at a break even point because you bought the same that you bought yesterday. So just continue to invest into the markets, continue to stay with it. Consistency really does pay off. I've seen it time and time again. I've seen it work out for me. I've seen it work out for others. I've also seen people fail and go, I want to get out of this account and not continue to invest into something that's diving or something that's falling, right? And then immediately regret it a year later. I do that with my brothers all the time. They were invested into Ethereum, or my not oldest brother, but middle brother. He invested into Ethereum, I believe, when it was at like 1,400. And obviously now it's at 4,000. So, you have these opportunities to invest into these plays, invest into, whether it's something, that's just a single stock or single company, or investing into the broader markets. You have these opportunities to stay with it and stick with it, and not say the same things that everybody else says. I wish I would have held on to that. I wish I would have bought more. I wish I would have stuck to that plan. Shoulda, coulda, wouldas helps nobody. Maybe it gives you a little bit more of a sense of, hey, I made a mistake and now let me fix that this time. But in most cases that I've seen, it never does. They just think that they missed the mark and they have to wait for that previous price level. When in reality, especially with broader market ETFs, you're not going to see that price level. You're not going to see it go down to the lowest point that it's ever been, right? Or a $40 price point when now it's at $70. Historically, these broader market ETFs have moved consistently. Even though you've seen decent drops, you also see those massive increases, and over time, it never gets back to those lower prices. Asking for the S&P 500 to drop back down to $50 is just not, it's not realistic. Guys, hit that like button, hit that subscribe button. Let me know what you think about this video, but I just wanted to clear some heads out there because I know some people are having questions as you see the markets that are dropping. But you got to have a different mindset looking into it, especially if you're investing into broader market ETFs for the long term, right? It's for the long term, happening over time. Hit that like button, hit that subscribe button, and I'll catch you guys in the next one. See ya.